Good morning. Good morning, everybody, or good afternoon. And hope you're doing well. And let's go see the stream. We got a few folks stopping by. We want to say thank you. I hope you can hear us. Let me just do a little sound check. Yep, there we go. I can hear it. So today is the 14th. We'll wait just a couple of minutes and we'll get started. And we will go, I don't, I won't go more than an hour. Gets a little old listening to me and gets a little old for me just talking. I don't want to be like Trump. That dude he can talk a dog off a meat wagon. That son of a gun. That's what my grandfather used to say. Talk a dog off a meat wagon. They don't have meat wagons anymore. So That's an old expression. And so I won't do that, but it is when we do these little sessions on YouTube, we're experimenting with it. It's really your opportunity to ask some questions. Can be anything market related. Don, where do you think the market's headed? Where do you think they've been? Don, can you plug in a specific stock symbol? I'm happy to do that, right? So don't hesitate for the benefit of anyone. You got a stock, you got a market, you got an interval, can be an option trade. By the way, we had some technical issues. We haven't, I can't say enough good things about TradeStation. I'm just a happy customer. Been with them years. I'm pretty demanding on any kind of service or contractor that I might, retain. And I come from a surgery background, and boy, they're just so good. They're so good. I had some issues the last couple of days, and I had to call them, and they got the patience of Job, and very disciplined. They got me through it. I think what the problem was, as you guys know, we live in Tampa Bay, and we had some storms in the last week that interrupted our power, and it kicks the crap out of our computers and our tick charts. And but they stayed with us, and I think, knock on wood, I think we got it all cleared up. And hats off to Mario and their support department. Really, really nice guy. And and the others as well. It took us a little bit to get through it. So I'm happy to answer any questions that you might have. You know, I always kind of like to just start. I like to talk about the about trading a little bit, the approach. I mean, we can draw trend lines and do all that nonsense that a lot of people do. I don't do that. When we're trading day in and day out, we don't. We'll show you what we do. But that's not really what I'm doing. And I think about it in a graduated, and we try to approach even the Q school in a graduated trading approach. Maybe I should trademark that, but and I'll borrow a couple of examples. Skiing, right? They used to teach graduate. I don't know if they still do, but it's how we learned how to ski, graduated skiing method. And they'd take you over to the bunny slope. They sat in the classroom a little bit for an hour. Then they take you up to the little bunny slope on a rope tow, not even a chairlift, just up to a rope tow. And you'd be an adult. You feel kind of silly, and they give you these little short skis. I'm talking like really, really short skis, like a couple of feet long. They were ridiculous. And they were like kid skis, 5-year-old skis. And you would learn how to turn on those skis and a lot easier to turn them. And you'd do that like for about an hour or two. And then they'd bring you in and they'd give you another set of skis, and they'd be a little bit longer. And then you get the idea. A little bit longer, a little bit longer. By the end of the day, you had skis that were about your height, which is where you want to go. Sometimes, if you're a real good skier, you could probably have longer skis. I don't know if they still do this today, but that's how Susan and I learned how to ski. And then ultimately you get off the bunny slope and you get on the chairlift and you go on up. Now, can you look at that stock? Yeah, I'd be happy to. Hey, Don, Jerry Jones purchased $25 million of a stock called CRK. Can you take a look at that stock? My guess is it's a long play, as the stock has not been relevant since 2008, 2009. Yeah, so we'll definitely do that. So you get the idea. It's a graduated trading method. You got to start out small, and you got to decide what type of skier do you want to be? Do you want to learn the fundamentals and be content to do some basic skiing, and then how fast do you want to get up to the top of the mountain and be skiing the moguls and whatnot? I think if you just just show up and rent yourself a big set of skis and get in the chairlift and go up there and start coming down, you're probably going to be okay. I mean, you're probably going to get to the bottom, but you might break a leg, or blow out an ACL, and that wouldn't be good. That wouldn't be good. So Darian wants us to take a look at a stock symbol, which we're going to do in a moment, but let's just take a look at Swing Machine too. And let's see what we see together. The 5-minute VIX went short at 4:35 a.m. Now I can't reprint that. I mean, that was today. And at 4:35, the VIX goes short. Now, what does that mean? That means to me and to our members that the market at a 5-minute level, thereabouts, is going to have a northerly bias today. That's what it means. Now, the ESU on a 5-minute, it is long, and it went long at 11:05. So you can deduce from that, that there were some short signals on the 5-minute. There were, and we saw them, right? And some of our members may have taken some money there, but they would have been not likely to succeed as long as that VIX stayed in a short mode. We would have needed that VIX to get long to confirm the shorts. But at 11:05, the market went long on the 5-minute. And if you took that trade this morning at 11:05 and you did it with a mini, you would be up $1,000. A micro, you're up 100. 10 minis, you're up 10,000, right? But again, if you're starting out, you're not going to presumably be trading 10 minis. You may not even be trading a mini, right? You got a graduated trading approach, not just with intervals, but also with margin, right? You just don't want to, go rushing up to the top of the hill or go rushing in with, margin and get yourself hurt, right? You don't want to do that. NQ, 11:30, long at 19,107. You're up 1,500. Now Russell's kind of an interesting bird of late. It seems to be going counter to everything else. Take a look at that. That is short 35 5-minute segments ago, or at 9:20, and you would be up 600. It is short. It's not going with the rest of the market. A little bit odd. It happens. It's a risk indicator in and of itself. So it gives me a little bit of pause that the Russell's not participating right now on the long side. So we definitely would want to keep an eye on that VIX. And then the Dow, we don't interpret too much out of the Dow. A lot of times money will flow into the 30 Dow stocks for a safe haven. But 31 5-minute segments ago at 9:40, if you had gone along the Dow, you'd be within 1 minute, you'd be up 1,200. So I'm just showing you, if you had been a member. Now, monthly members don't see this, right? They don't see the intraday traffic. Monthly members, presumably, they could be intraday traders, but presumably they're swing traders, few days, few weeks, and our programs that you see at night are going to be conducive for that. If you're a swing trader, about the only time, in my view, you want to be looking at the intraday traffic is when you're getting ready to either take a loss or take a profit, and you want to get in there and get the last little bit or protect the last little bit, whatever it may be. But otherwise, I think you should work just off the closes and don't worry about it. If you are an investor, and you're making a decision to go into CRK on a monthly basis, like Jerry Jones, well, then you definitely don't want to look at the intraday traffic, and you don't even want to look at the daily traffic swing. You might want to look at it on a week-to-week basis or month to month. Now, if you got Jerry Jones's money, he's in no rush, right? Oil futures on a 5-minute, they went short 27 5-minute segments ago at 10 a.m. And if you had shorted that as a member with this on your desktop, you'd be up 640. And then gold. Sorry, Peter Schiff, but gold went short this morning at 835. Now, there was an economic number, and, I don't even know what it is. I don't even really care. I don't need to hear it. I don't need to, I know that they're around. I just need to know what the reaction is. And I don't need to, listen to Peter Schiff or anyone else tell me why it did or whatever it does. Maybe it comes back. But if you had sold it at 25.04 and you did it with a mini contract, you're up $2,000. So in round numbers, let's not short. And by the way, we almost never short the VIX. Right? It's $50 a tick, and we would never short it. Could make for a very bad day if things were to turn around. We will buy the VIX on occasion, but if we can call that a grand, 2,300, 3,000, 4,000, 4,600, roughly 6,500 to $7,000 in profits here off of Swing Machine since, this morning. Your job as a trader and as an annual member is to use this tool as well as maybe some other tools in conjunction and get a portion of these profits. It may be just one market, one interval. Get it to the boat and get it on your stringer and get the boat into the dock, put away your fishing gear and go surf, go water skiing or, go for a hike, walk with the dogs, go enjoy the rest of your life. I mean, don't don't sit in front of your screen all day parsing this and parsing everything, right? It isn't, this is meant to be fun, meant to make cash flow so that you can go do other things with your life, right? Big proponents of it. Now I'm here a lot. I'm doing exactly what I want to do. And and that's okay. I mean, it's up to you. All right. So I just want to show you that. And but let's punch up. Let's stop where we are and we'll come back to it. So we want to take a look at CRK. This is how I would do it. Let's do it this way. I'm going to copy this window, if you don't mind. I'm going to open up a whole new space. And let me remove these things. And I'm going to paste a radar in here, what I just copied. As an example. Oh, I thought I copied it. Maybe I didn't. Let's try it again. Copy window. And I'll paste it. And now what I'm going to do is I'm going to delete all these. And we're going to use a stock, right? So we're going to see how Jerry Jones is doing. So let's go to studies, going to edit. And now we could have punched it in what we had, but I thought I would go ahead and just show you the versatility of this tool. So we're going to change it. We're going to change futures to false and we're going to put stocks in here. True. And it's Jerry Jones. So I don't think Jerry Jones is buying, $100,000 of CRK. He's probably buying $1 million, right? But let's buy $100,000. We don't have, let's say, so I'm going to put in there the dollar amount, 100,000. And all right, so now let's go see CRK. CRK. And all right, so this is on a daily basis. Do I have the symbol right? I think so. So I don't even know what this company is. CRK, Comstock. I don't even know what that is. All right, so on a daily basis, CRK is we're short. Went short 32 days ago. So we wouldn't, if I heard that, this company could be something I want to buy, I won't buy it yet. I would wait. It is rising. It is rising against the short. But I would put this on my watch list. I'd set myself an alert and I would wait. And if it does go into a confirmed long, then I might buy it. But I'd wait. We can also see though, let's see, we don't know where Jerry Jones got involved in this. So let's put it on a weekly basis. Maybe he did this weeks ago. Nope. 3 weeks ago. On a weekly basis, we would have been shorting it you would have saved yourself 26%, or, or if you shorted it, you'd be up 26%. So Jerry's, right now, but he has a long-term view, right? He's probably trying to get into a long-term view, but on a daily basis, I'm not buying it. And on a weekly basis, I'm not buying it, just not, because they can go lower, right? Um, Now, if the daily goes long, I might buy it. I might use some options, because if the daily goes long and the weekly is short, what type of trade is it? It's a counter trend, right? It's a counter trend. Yeah, he's an oil man. I don't know what the stock is, but yeah, I know Jerry. Yeah, Dallas Cowboys, right? Yep. So, and he's probably investing in something he knows, or a friend, or so, but that's okay. I mean, but this is what I would do. Now I want to see CRK on a monthly basis. Still short, right? So the stock has really been trashed. It's not in panic sell any longer though. And in the mean is about 1036, 1026, 961. So it's a counter trend. It's a counter trend. If I was to buy this thing, I would wait for this to go long. I would wait. And if I did go long, I would recognize it as a counter trend, and I wouldn't want to take it. I would set my stop at 960, 959. I wouldn't want it to go below there. And we can even put it on an annualized basis, because again, I'm thinking, maybe this guy, can we put on an annual? Monthly. No, we don't have an annual. Let's see. We don't. I don't think it has an annual choice there. So, all symbols. Yeah, no. No, that would be it. So that would be it. That would be it. If there's any others, let us know. If you want us to punch in any other stock. Let's just put in a label row here. Take, for instance, how about NVIDIA? NVDA as an example. So NVIDIA on a daily basis also went short 14 days ago. Short, you would be down, you would have lost. But NVIDIA is a pretty active little, stock. So, I'd probably want to get a little bit closer to it than a daily. But as an investor, if so I'm either going to play Nvidia because Nvidia is Nvidia and it's a noisy little stock and really, really active. I'd probably be okay trading it, with options and trading it. I'd want to trade it intraday, or position trade it a little bit with the options. And so I'm not really looking necessarily for the daily trend. But if I'm an investor on NVIDIA, I'm going to really slow it down, even slower than daily. And so let's see what the weekly is. So on a weekly basis, Swing Machine went long 82 weeks ago, 82 weeks. Now, split adjusted, the entry was $20. So if you had put in $100,000, which is what we put in here, you would be up 470. You'd have $500,000. And if you have a monthly horizon, now when you're at a monthly, I mean, you don't want to be trading a monthly, intraday, or daily, or weekly, and you got to wait for them to populate. And so you got to get your stocks that you're interested in and put them in, and you got to have the patience to wait for them to come, and if it's CRK, I need to wait. I don't care what Jerry's doing. I could care less. But, he might be something that puts something on the radar, but I got to have either have a discipline or I don't. And he might, you never know. So, but let's put it on a monthly basis. Now, this is crazy. Check this out. So on a monthly basis, it was 132 months ago, back on September 30th of 2013. And if you had put $100,000 into NVIDIA, you would have real time split adjusted. Split adjusted, you would have got in at 39 cents. That's how many splits there been. You'd have $30 million. Mm, that's a beautiful thing. Mm. Now, do I bemoan the fact that I don't have? I had NVIDIA. NVIDIA was one of and I had thousands of shares in the late 90s and we did okay. But do I beat myself up that I still don't have NVIDIA? Because I don't. I really don't. Because I also had thousands of shares of Sun Microsystem, symbol SUNW. They're not around anymore. They're not around. So, but you've got to set up Swing Machine, and usually we color code Swing Machine blue to denote the stocks, and then you could put in whatever amount of money. So if you put in $10,000, you'd have $3 million in NVIDIA. If you got any other stocks you want us to look at, I'm happy to do it. We'll slide back. Um, was I going? But I was talking about that graduated trading method, and I also wanted to show you something. I hope I don't get a copyright for this, but I hope not. I'm not a pilot, but let me see if I can blow this up. Let me see if I can play this via. Nope. Trying to turn down the volume. Um, oop. Oh, heaven's sakes. Where is it? Come on. It's hiding back there on me. There it is. All right. So I got the volume down. That seemed really loud. Let me turn it down a little bit more. I just want you to, they call it flying under the hood, right? And watch what he does to this kid. Now think about it. He's trying to rattle his cage. Do you hear him? You're the worst student. He's trying to shake his confidence. He's trying to get in his head. And I don't do that to anybody. Okay, I don't. Maybe I should. Okay, so just think about it for a minute. Now, I'm not a pilot, but right now, you've got to, if you're not, you haven't been flying long, you got to be really uncomfortable, right? He can't see out here. He can only see these gauges. And this dude's asking him to fly the plane. Now just think about that, in his head, and you'll hear it in his voice. Hear the emotion? Do you hear him? In his mind. He's trying to visualize. He's probably very uncomfortable. I would be. Oops, I'm getting a commercial here. Okay, I'm going to stop and you guys can certainly find it and think about it. But we come back to our little radar. Um, I can see everything I need to see here without looking at a chart, right? We do have charts. I can look at charts. I can show you charts because you want to look at charts. I know you do. You want to see your stochastics and you want to see your candles and you want to see your bricks and you want to see all that. And that's fine. I mean, the other guy, he can, he looks really comfortable. He can see the plane, but you want to get comfortable with reading your instruments and learning to trust your instruments on the intervals that you are flying, right? You need to understand that. That takes practice. I just can't imagine being in an airplane and all I knew was flying the plane in nice weather. Imagine how this young fellow would be if an instructor wasn't right beside him and the weather was really, really bad in Tampa Bay, and the plane is being buffeted around, really buffeted around. And he doesn't have a hood on his head. He just can't see the horizon. And he can't even see the tips of his wings. And he's got to get that plane on the ground safely. Be pretty unsettling, right? If he's got to do it for the first time. That's why also, I share this with you. If you are seeing Swing Machine and you're watching your charts and you're trying to match Swing Machine to your charts and doing that, um, it's probably not, it isn't. We want you focused on those first 2, 3 days flying right from here. No chart, no chart. We have members that do day in and day out. But, I have to ask you, and I can't know if I'm not sitting beside you, to park your charts. And I got to ask you to go slow, to go slow. We got to just do little touch and goes, but if you want to get in there and start flying the plane, really, really fast and really, really lots of margin and looking at this chart and that chart and this noise, that noise, then the cockpit's going to get really, really noisy and your trading's going to get really, really noisy. And, you might crash. You might. So that's the idea and the purpose behind, even Q School. So I wanted you to see and just imagine what it would be like, if you um, you know, don't have a chart at all, right? Now we can certainly bring the charts in, right? And you're like, oh, okay, that's real comfortable. Yeah, because you can see the horizon now. You can see the tips of the wings, right? You can see. And then I can point to this and point to that. And this is like looking out the window. But we encourage you to try to trade Swing Machine for at least for a few days, all by itself, and see how you do, because then we can bring up any kind of a chart, any kind, multiple different kinds, and have you looking at both. But it's going to be different. It's going to be very different. I guess sneeze. Sorry about that. I got a mask on. Kidding, joking. But by the way, this little Renko chart, oh, I thought we had this arm too. Let me I gotta bring this over here. Let's see here if I can do this. Now, I'll have to deal with that. I don't have it. I don't have it armed. But they have it, and we're only playing it to the short side. But each brick is worth $850, and we've been foregoing all the longs, which wasn't the right thing to do these last couple of days. But you can count them: 1, 2, 3, 4, 5, 6, 7. Now, would have been a couple of little log jogs out. You would have lost a little money here, a couple of bricks, but you can count these. Would have been somehow of a trade. But when we describe Swing Machine, these radars, it is like flying under the hood, right? That's what I wanted to share with you, and we're going to encourage you to do it, because if you can do it and learn to park everything now, just like that, that instructor, that young fellow, his eyes are he's got the hood and his eyes are glued, absolutely glued to those gauges. And he's looking, probably burning a hole in them, trying to understand, like, okay, okay. And then his mind is playing games with him a little bit. And it feels this. And you may be trying to do that on YouTube. You're on delay. I'm not showing this for you to be able to pick off trades. And it's fine. And in the beginning, you will be burning a hole through Swing Machine, but I don't burn a hole. Our members don't burn a hole, not after a period of time. Hopefully it's always up, and it's just we can give it a glancing view, and we know instantly where we are. And we want to know that without having to look at a chart. And then we can open up, take the hood off and look at a chart, or look at a few other things, and maybe take something else into account. Does that make sense? I hope so. But I am happy as we're starting to, you can see we're starting to roll down, right? We're starting to roll down. And I want to do something here, by the way. I can copy this window. And we'll take a look at some of our other tools, some of our other gauges, if you will. And but while I'm doing that, if you have any questions, or you want us to look at anything else or any other stock, I'm happy to do it. I do want our members to know we have a few folks that joined us on members can punch in on Zoom. They know that I was having some technical issues. And I think it was our fault, because we took some lightning. We had some bad weather last week, and we had some power surges, and it wreaked havoc. But we've been on the horn with TradeStation the last couple of days, and did a beautiful, beautiful job. They're great support and got us all, I think, all cleaned up. So there we go. All right, so we are. Let me just. Yeah, we're good. So that strategy is activated, and if we get a short signal, we'll be there. It'll go in automatically. It'll go in robotically, if you will. Now let's take a quick look here. I want to show you. This is our Nicholas timing model. The Nicholas timing model, she's off a little bit. She's coming down, but it it went short. We made a video of this on YouTube. We showed you. It went short the VIX on the 8th, and the markets were still short. So we knew it to be a warning on the 8th that the market very well could bounce. We told, and our members know what Nicholas is. In here it's receiving 3 different data streams, right? So there's nothing you can see on a chart, but the chart is actually receiving 3 different data streams. Let's pick the ES as an example. It receives the data, the algo is compressing the data of the ES, the data of the 10-year treasury, and the data of the VIX itself. And it generates a daily signal. Now, when we first developed this back years ago, we thought we were only going to use it with the VIX and the ES, but then we put it on the other markets, and lo and behold, we found out to our surprise that all the other markets generally move within the same day because the markets have been commoditized. But when this fired short, the markets were all still short. So we warned our members that night and said, we got an early warning that maybe the short signal is going to go away, or it could be a feint, and we're going to stay short, and then the VIX will go long in the next day or two, and we'll continue short. But we knew that there was an inflection point there, and it's usually within 72 hours. And it turned, but we said usually it's the next day. And what happened the next day on the 9th? The markets all went long. And then now we're in a confirmed long. And if one had taken this trade, would have taken quite a bit of capital if you used futures contracts, but where you'd be up 20,000. You would have been up as much as about 25,000. The short signal previous to that had a high watermark of 75,000. The biggest trade that we've had was the COVID trade, and we were up close to 300,000, 280 to be exact, over a 3-week period. So this Nicholas timing is picking up on what we call the market acoustics. It isn't a trend. It isn't a counter trend. It's a mathematical formula that is trying to pick up, and it's just pretty darn good and helps us stay on the right side. Now, if you don't have the capital to carry, now this would take quite a bit of capital, especially if you're carrying it overnight with original margin. But you could use micros, or you could use options, and you don't have to trade all the markets, and you might use it as a barometer of what side of the market you might want to favor. So for instance, the last couple of days, you could say, well, you know what? Nicholas is long and a confirmed long, so maybe I want to lean on the short side. But I wouldn't extrapolate too far down. I mean, I wouldn't filter 1-minute trades or 3-minute trades based on Nicholas. I wouldn't. We look at the fear gauge, and the fear gauge here is still telling us it's risk off caution. So we were risk off. We've been risk off for 15 days, 20 days, the last 3 weeks. It's been risk off. Even with this rally that we've had, we're still risk off. But it is a caution. It's telling us caution, because the risk off, we may not transition into risk on. If we do transition into risk on, then yeah, we'll take a more aggressive posture on going along the market. But right now, it's telling us no. Skew is also telling us at 143 and starting to trend up that the big money, as we're rallying up, they're getting more and more defensive. The yield curve is not good, and you can see the interest rates here. The 90-day interest rates are not moving at all. They're pegged by the Fed. The 30-year interest rate is down another 53 basis points right now. That's not good for the bulls. I know what you're thinking. That's going to help in, mortgages. It is for anyone who has any money left or has a job. But um, but the fact that they're going down tells us that many of them don't have jobs and don't have any money left. And the big money knows that, and they're putting their money into treasuries not to get a return on their money, but a return of their money. So the rates are falling here. And because the Fed has them stuck up here at 90, it has them stuck at 5%, yes, the Fed is going to cut. They're definitely going to cut in September. Do they cut 25? Do they cut 50? And do they cut before? But they're not cutting in the face of good economic data. They're cutting in the face of bad. But that doesn't mean that the market won't rally when they cut. It might and it may not. But we're going to just play what's at hand, right? And of course, the Fed is apolitical, and of course, they're going to cut right in front of a presidential election. I'm sure. So she can claim we won't go there. All right, so I'm happy. Let's take a look at Pebble Beach. Now, this is pretty sweet. Here are all these buy signals, buy and sell signals. We have a total, take out the label row, there are a total of 22 signals. And here is the stock. Here is the entry price. Now, Starbucks may have gapped. It did gap. So I don't think you could have had that trade on that gap. That had a gap. But Micron probably didn't. Yeah, you could have been in that. So you could have had could you have had 97 today? Yeah, you could have, because it opened at 80 around 89.77. So, and this is on a $10,000 investment. So that's 3% return, the entry price. But the general point being is out of 23 signals, we're profitable in all but one. And all these signals are today. And this is what we call, you can't see the name of it, but SMC Pebble Beach. And let's go to the option tool and let's show you. So we don't have any, that's kind of interesting. We don't have any long option opportunities of the whole S&P 500. Very unusual. That's very unusual. So we don't have any. That kind of tells you kind of where we are. And on the dark side, though, we do. And it's these stocks. We would be looking at fading these. And we would be looking at this configuration. Now, if you're an option trader, you still got decisions to make about, do you do it at the money? Do you go down on the delta or up on the delta, depending on what you want to do? But this tool will tell you that, that let's just pick one like AIZ. It's saying the optimum trade for 35, 45 days is a put. But you don't have to do a put. I mean, you could, if you have option experience, you could sell a call credit spread, but it's just saying the optimum would be to buy a put. This one here, this is Cardinal Health. It's suggesting that you sell a call credit spread, and that is our favorite thing to do on the short side. We love selling call credit spreads, and we love selling put credit spreads. But this tells us what the optimum would be. But you're not locked into doing that. And you still have some decisions to make, where you want to place. And then, of course, if you're eyeing condors is a neutral strategy, so it shows up on both sides. These stocks right here today represent the best candidates of all the S&P 500 for eyeing condors. So if you have a tendency to think that the market's going to stay in the middle, then, maybe an Iron Condor on Lowe's and HPQ, and they're not going to pay as much, but they're going to do just fine. So we can go back to the radar, and which is where we keep a pretty good view. And we're here. Now the 5-minute VIX is coming up. It's ripping. It is starting to come up on a 5-minute level. So still a little bit early. Now, I hope folks aren't doing this to try to take these trades, but we certainly have members that are very adept, very quick, very adept, very experienced, and they may have come in as an example. I'm not saying that anyone at home should be doing this, but this 1-minute signal was 27 minutes ago, just 27 minutes at 12:20 while we were talking. And if they took that trade, they're up $1,000. Now, how they handle it from there, they might be looking at a chart. They may lock in a certain stop level. They're not going to let $1,000 trade turn into a loser. They're not going to. What they might do is they might lock in a free trade where it's guaranteed to make them 100, and then sit back and let it play out. And if the 5 turns over, they might just sit on it and just say, I got a free trade. I'm guaranteed to make $100. And they might go make themselves a ham and cheese sandwich, come back in a couple of hours, and maybe they make 100, or maybe they make a couple of grand. 30 minutes ago, 1,500. 30 minutes ago, 495, 23, right? It's easy for me to point this out, but just like it looks easy to fly that plane, how hard can that be, right? Just put a hat on, look at the gauges, and fly the damn plane. Okay, right? Probably, point being is you've got to get yourself set up, get the tools, and then practice, practice, practice. If you have any questions, let me know. We can go to the S&P 500. Here they are. And let's look at these are just 2 days old. They're almost all longs, underwater on some of them. But again, this is the entire S&P 500 in here. Let's sort this way. We'll show you everything. Continues to be GE, continues to be the leading dog. It used to be NVIDIA. And I'm going to just scroll down, not to make you dizzy, but to show you. So the signal, the stock is here, is a daily. 192 days ago, it signaled at 90, and you're still in it, and you'd be up 83%. But you have to wait. I mean, if that's what you're going to do, you have to wait, and then you have to have the nerve to pull the trigger on some of these others, and then have the discipline and the patience that if Swing Machine gets them wrong and pulls the plug, you need to pull the plug. Okay, because the machine will pull the plug. Humans won't. They'll listen to that inner ear. Oh, we're okay. My wings are level. It'll come back. And next thing you know, you're in the ocean, right? So you don't want to listen to that inner ear. And you don't really want to be listening to anyone else, not me, not Jerry Jones, not CNBC, not anything. You've got to close all that shit out, or you'll put the plane in the ocean. You don't want to do that. So let's go back here. I'm sorry, I'll show you all the losers. We'll scroll down. We'll start with the good ones. And stay with me now. I'm going to just scroll down. We're long and short, right? We're long and short some of these, and we can highlight any number, but let's keep scrolling. So we're profitable. You can see the percent return. We're at 10%. So they're all profitable. Keep going, keep going. Now we got trend information that we could be gleaning, but let's scroll down, scroll down, scroll down, scroll down. Right. All right. So the yellow ones start showing up, they're basically even. So out of 500 stocks, we're profitable in 369. These yellow ones, they're even. They're not up. Now we got the red ones. So out of 500 stocks, we're flat or profitable in 379. That's low, right? That's actually low. But the market has, been under pressure and kind of choppy. We usually somewhere between like 430 and 450. But let's scroll down and see the losers now. In percentage terms, what is our worst percentage? Newell. Newell. This one continues. Remember, we saw this last week. This continues to struggle, down 22%. A little unusual that Swing hasn't dumped out of this. I happen to know what this company is. That's Newell Brands. They make, I think they own Rubbermaid stuff. I think that's really interesting at 692. This would be a stock that I'd probably, be looking to buy and sell covered calls against it. I might, but everything else is pretty much in line. But Swing Machine could come through and dump it, in a dump it. So it doesn't win on every single trade. I don't want to give anybody that impression, but it is pretty disciplined and it has no ego. It's not trying to be right. It's not trying to be the smartest guy in the room. And there's a lot of other information on the screen before even looking at a chart. But this is where I'd want to come and I'd want to punch up. So for instance, if we put that CRW in here, we can do that again. Let me do this. I'm going to add a label row. And then just to separate this, and I'll add a blank row. But then the symbol was CRK, actually, CRK, not knowing anything about CRK. So Swing Machine is on a daily basis is short. It's been short for 32 days, and that short is underwater at 2.74%. And but it is rising against the short. So if I'm interested in that, I'm going to wait until she trips off and goes long, and then I might. And if it's going to be I'm thinking an investment, maybe I want to stay longer. I might just come in. I'll come in with no leverage, come in with a little bit, maybe sell calls against it, and just put it in. But you gotta have the patience. I mean, if somebody did this with GE and they put in $10,000, it's 192 days ago. There's no reason to sell it. There's no reason to come out. Just stay in it. I don't know. It could be there for, a couple of years. You gotta wait. Here's one here, Iron Mountain, 78 days ago. And, kind of like that company. If you had put in $10,000, you'd be up 39%. There's no reason to come out. So we don't have an alert service ourselves. Annual members can have this on their tools and build out their own alerts. So you don't need an alert service from me or from anyone else. You build your own off of these tools, because you would say, well, how the hell do I know when it alerts? Or how do I know when it goes off? It'll send you could program this to send alerts to your phone. And it's a daily signal, so they would go off, they're not going to go off every hour. They're going to go off when they go off. Makes sense? We'll come back. We'll let you watch here, and I'll shut up and answer any questions. But to the, back to the trading game, we're very, very serious. I mean, obviously, I spend a lot of time here, so it is not a game, right? We approach it that way. We want it to be fun. It should be fun. I approach it mentally that way, but but it's very, very important to Susan and I. And very well rewarded. I put a lot of time in, but I'm doing something that I want to do. I don't I don't have to fly anyplace anymore. I don't have to babysit a bunch of salespeople anymore. You know, I don't have to, do any of that. I don't have to employ anyone. Um, I don't have a whole lot of paperwork. I can do it from wherever I want to do it. But we're trading as a business for ourselves, trading, and stock market caddy keeps me a little bit more busy, and it's entertaining to help other folks learn to trade as a business for themselves. And just zero out all the noise. If you're on the Twitter sphere, you can who they are. There's just a cadre of you know economic speakers and economic mumbo jumbo. I listen to it a little bit. I find it a little, fills the time, but I don't trade on and not an ounce of it. Not an ounce. You can't. You don't want to have, you don't want to be flying that plane under the hood. Now, just imagine, you don't have an instructor beside you. You don't have that flying under the hood experience, and you find yourself in a fog bank, and you've got your fiance, and you got her sister, and you're off the coast of Boston in the summertime, JFK Jr., and you can't see the horizon. What a horror show. What a horror show. I mean, because they had to know. He can't see shit. They can't see shit. And he now has to focus, and they are probably, God knows how they were reacting. Give me the willies, right? Give me the willies. Um, you can put yourself, if you are a trader and you get reckless and you use too much margin, and you start trading too fast, too much over your skis, right? That's what it means to trade over, ski over your skis. You're going, you're not at your level, right? When you go skiing, they got the little green runs, then they got the little yellow ones, then they got the black diamonds. Susie and I, we didn't ski. We don't ski that much anymore, but we did a lot. We would leave the Florida to go skiing, but it was only a couple of weeks a year. And I would say, Susie, let's stay out. We're not going to ski the black diamonds. We don't ski enough. So let's just ski the green and the yellows and have a good time and enjoy yourself. But, if you get out over your skis and you want to play the black diamonds, or you want to fly the plane over your skill set, you can do the same thing here, and you can put yourself into a whole world of hurt really fast, and so fast with this margin that you can give yourself a case of myopic vision. Whether and it's all relative. I understand money is relative. But if you're putting tremendous pressure on the account day in and day out, and you're running too hard, too fast, too big, that's not good. We don't do that. I could do that. I don't do that. All right. All right. I'm going to let you watch, and around 1 o'clock or so, we're going to turn down. We invite you to visit the site. We invite you to give us a call if you want. Monthly memberships are unlimited, right? You can start out slow and get to see these signals when, what is Nicholas going to do here in the next few days? We do have people that will trade just Nicholas, and they will trade it with options. If you did that in the last two signals, did well. You would have done very, very well. On the like I say, the long call was there for 60 days. So if you had a call option on the S&P cash for 90 days, did something like that, I mean, it would have been a big, big payday. And then if you turned around and went short, you would have caught that other move. Now I can't, he doesn't get them all right. I don't know when the next one's going to come, and we never know how deep or how high they're going to go. We don't think when we're back here, we think we've extended a little bit further. We may just pull back a little bit, and we may have to go up and nose around up here. And if we do, we'll be sellers up in here someplace if we do, but we may not. We're hitting the resistance of this group here. See, these people, there were people that bought here and they want their money back. And they're thinking, like, man, I'm getting close. I want my money back. As soon as you get up there, I'm going to sell and I'll get my money out. Sometimes they never quite get it all. And that presents overhead resistance. These people over here, there were people who bought up here and put on leverage. They also want their money back. Overhead resistance. So we never quite, just like when these people bought up here or institutions. Oops. Uh-oh. I'm sorry, that's the Amazon man and Abby. 1 year old yesterday. She had a birthday. So when they come down, they get scared bejesus out of them. They say, oh man, if this thing can just get back to where I was, I'll get my money out. And then it comes back up eventually. And then these people are like, oh man, I'm not going to get all my money out, but I'll get some of it. And then they sell. We drop. That's the psychology of the retail trader. But the retail trader is not responsible, in our view, for moving the price action at all. They are on the ride. They're in the back seat of the plane. The hedgies are driving this. And there are high frequency traders whose firms are here to be buyers when there are no buyers, like down in here. And they are trained to be sellers up here when there are no more buyers. That's how they make their money. And we're taking a page out of their book. We're not a high frequency trader, although you can trade as frequently as you want to trade. With a lot of our programs, you can set the frequency. You can ask the computer to go through iterations and give you an idea of how fast you should be trading. But one of the mistakes we see a lot of new people make is trading, not having a discipline, being undisciplined, being impatient, trading over their skis, trading the noise, over leveraging, not having enough capital for the trades that they're putting on, and not defining their risk. It's just a whole list of it, and that has to be stopped. And if you're doing it, you just wherever you go, whatever you do, you just got to stop and get an education. Because if you think, and there are other places to get education, I think we're very competitive and the value is there. But if you think that's expensive, then try to trade futures or even trade options, without getting an education, and it'll be really expensive because they will take your money away. And there's not many other professions that, if you don't do a good job, you don't get the sale. If you don't do something, you don't get your bonus. But here, if you don't do a good job, not only do you not get paid, they reach in, the market reaches into your wallet and takes your money out. And it stings and it hurts. So you want to learn before the market does that. We'll be here. I'll wait for any other questions. If you got anything, let me know. Okay, everyone. We're going to wish you the best, and it should be fun. It should be, for us, it's almost meditative and it's relaxing. I hope it is for you. And let us know if you have any questions. We wish you the best.